Huge shout out to the bloke up the back, Shane Webster. He put that video together and that was outstanding. So well done, Shane. Could you ever imagine if your job was to go around and check wallpaper for printing faults? Would be pretty interesting, wouldn't you thought? No, probably pretty boring. Well, a guy by the name of Mark Gain, he had that job. That was his job. Go around, check. Oh yeah, that looks pretty good. Oh no, there's a bit of a fault there. Wow, this is exciting. The thing about Mark Gain is that while he was doing that, he started to think about other things. And he started to write about a beach, a fictitious beach, a beach that didn't exist. And then it turned into a song, and the song's called Echo Beach. And they went back and they said to Mark Gain, after Martha and the Muffins had their big hit and it was flying along, they said, where did the inspiration come from? And he explained to the reporters about how exciting his job was. And all he thought about the whole time was another place he'd rather be. Somewhere far away in time. Now, lucky for us, Abbey Beach does exist. And it may be far away for some of us who have travelled down from Perth, but we're here and it's exciting. The market for the companies that are participating today is absolutely booming. And it's great to see so many people here. So I take great pleasure in opening the Canaccord Genuity Southwest Connect ASX Showcase. I'd now like to take this opportunity to give the acknowledgement to country. The Southwest Connect delegates acknowledges the traditional custodians, the Wadani people on whose land we are living and working, and pay our respects to elders past, present, and emerging. So it's so great to see so many people here. There's familiar faces from those that have driven down from Perth. There's also a whole heap of new people, probably the first time that you've been to a vertical events conference, those that are from the Southwest, and we're great to see you. And it's also great to know that this event is being live streamed all across the world, but predominantly our database on the East Coast are tuning in. And we look forward to hopefully next year when people can fly around this great country of ours. They can fly direct from Melbourne to Busselton, and we can bring a whole range of East Coast people to this beautiful part of the world. Now, some of you who do know us, you'd know Stewie McDonald. He's been running this business vertical events for 20 odd years. And one thing about Stewie is he's a great operator, but naturally he likes to have a bit of control. So he went through my notes about 2 minutes ago and he's made some marks on it. So just bear with me if I come across a mark that I'm meant to be talking about that I wasn't prepared for. So you can't hold an event like this without sponsors. And Stewie and I bravely made our way into St. George's Terrace and went up to see Canaccord. And we had a chat to their team and we spoke about an event that we could run in the Southwest. Luckily for Stewie and I, Chris Webster, David Moore, they jumped on board. They then convinced the executives associated with Canaccord to get on board. They've driven it through their Busselton office, which is great to see. So we're really lucky to have had Canaccord here. Chris will get up and say some words shortly. So a big thanks to Canaccord. Oh, here we go. Stewie's mark. Oh. Now, when you go down to the Canaccord table, you'll notice that they do a lot of research on some top quality companies. So make sure you grab one of these booklets at the Canaccord table. And the reason Stewie wants me to talk about this is one of the companies that they've featured here is Golson. And I think JP is in the audience somewhere. And I'm not surprised that Stewie wants me to talk about this because Stewie was quite bullish about Golson when they were 8 cents, 10 cents. He even convinced me to buy a couple after one of JP's presentations at our RIU Sydney Resources Roundup, and I got in at 12 cents. When they got to 25, I thought, you know what, this lithium thing, not sure about it. I think I'll take the profit. And Canaccord comes out with a $2.60 target price. So thanks a lot, Canaccord. It's good to see Stewie still holding. So, and then speaking of sponsors, we move on to another great organisation who's been highly supportive of us, and that's BDO. We've got Peter Toll and Adam Myers here. BDO have been a partner of Vertical Events at a lot of our conferences, but in particular the RIU Explorers Conference, possibly 15 to 20 years they've been with us there. So we're really appreciative of the support from BDO. The new sponsors come on board, Steiner Price Pagnon. Now, I'll tell you what, they've been busy. There's been that many IPOs go out, and every time I seem to read one of the new company that lists on the ASX, the independent legal report seems to be coming from these guys. So thanks to their support, and we look forward to building a good relationship with them going forward. Who here likes a good coffee? And I'm sure many of you have already sampled the coffee. So Laurie Hughes from Yandal, he stepped up. He wanted to be involved in the program, but we just sold it out. So he said, I want to have some involvement. And he's come on board as our coffee sponsor. So please take the time to get around and talk to Laurie, have a chat to him. He's got this really cool bottle of Mauritius rum on his table. So I'm sure that that would be something that you would aspire to winning by the end of the day. And we've got Ben Kay from Automic Group, another one, a great organisation. And a lot of you are shareholders of companies. Well, I'm sure you get a lot of correspondence from Ben's company, Automic, because they are the leader when it comes to the share registry services. Coop, right. Again, I can see some red markings here. So Coop is run by Lockie Horn. Lockie Horn works in the same building as Vertical Events in Subiaco. And if you look around at this great website that we've got and this design of and it's not me surfing, but the person who's surfing, Lockie put all that together and he's done a great job. For some reason, Stewie's written down, I've got to talk about Lockie's balls. I'm not quite sure what that means. Oh, stress balls. Mate, I was getting stressed looking at the notes. Oh, here's one. Right. Here we go. Lockie's balls, stress balls. So make sure you get down to Lockie's table. They've got this QR code, and I believe that if you scan it or something happens, you go into the draw to win $1,000 worth of wine. So that's pretty cool. I'll tell you what, if you don't win the wine, I'll tell you one thing that's pretty cool about these balls is that you can throw them. Oh, Stewie also added that the hotel said that if anyone's caught throwing Lockie's balls around, they're going to confiscate them. So no more throwing of the balls, right? So I just also want to make a special mention while I'm up here of Dave Tasker and Chapter 1 advisors and thank them for all of the assistance that Dave, he's one of the pioneers of this event. He's heavily involved and we're extremely lucky to have had Dave's support. So I'm sure you guys are sick of hearing from me and you're looking forward to the beautiful Chrissy Morrissey over here. And so I just get a show of hands. Are there any people who are from the Southwest in the audience that may have lived in, the Bunbury Southwest region during the early 90s? Got many people here? Do you remember Chrissy? She used to read the news on GWN. So it's great to have brought her back to good old Southwest, and Chrissy's going to be your MC. So thanks again. I hope you guys have a great couple of days, and I will hand over to the expert.
Thank you, sir. Thank you very much. It was a great time of my life being down here. I used to spend a lot of time, obviously I lived in Bunbury for 2 years, and a lot of time down here in Busselton picking strawberries and surfing and doing all sorts of great things. So it's nice to be back today and to be able to spend a couple of days here amongst you. Interesting, Jackson talked about some of the guys that are here from our Perth events who've come all the way down here and have got themselves a couple of nights accommodation. Would you put your show of hands of those of you who've actually come down from Perth? Oh my God. Okay. So we've got about 50-50 in the room then, Stu. So a number of you I've talked to who've said, look, it's been great. We've actually, there's a group of fellows who have a group called the Australian Shareholders Association. There's about 30 of you in the room. Derek Miller and Tony Ward were telling me about the group. They've actually have their meeting on a Wednesday, Stewie, and they have postponed it this week, so they can all come here today and learn a little bit more. And Matt, there's a couple of you that have done the sea change earlier on in the last 3 or 4 years and live and work down here, and this is your first opportunity to come to one of our events. They're really, really pleased that they've actually been able to do that. Now, my job today, I'm going to go straight into it, is Madam Lash. So I'm here to keep you all in check, keep times running smoothly, ensure that we get to those all-important markers at morning tea, lunch, and of course, our drinks this evening. We'd love to catch up with you and have a chat with you then as well, and give you the opportunity to talk to some of our presenters, because it's not just seeing the presentations, it's the interaction. We want you to be able to come up and question these people afterwards and ask them about the companies and see if it's something you want to get on board with, if it's another gallon for you. And Stewie, I'm holding 2 still at the moment, Stewie, so I'm pretty pleased with that investment that I got. So there are some great potential investments for you here today, and I really want to see some of you walk away with portfolios that are a damn sight happier than when you came through that front door today. That's what it's about. I know some of you have actually not just sea changed, you've retired down this way. So let's make sure it's a retirement that we can really, really enjoy. Right, Jackson mentioned 2 fellows that are going to come up and have a bit of a chat with us. And I'm going to get them up here right away. They've got a 20-minute presentation to give to you. And it is, of course, our major sponsors, Canaccord Genuity. Chris Webster, our State Manager for WA, and Greg Golson are going to speak. He's Director of Private Wealth and Research. So, Chris, you're coming up first. Now, 20 minutes. So what I'll do now is you can be the poster boy for timing today. So what I usually do is I will give a 2-minute warning bell towards the end of the presentation. And then at the 1 minute, I'll come over and I'll stand particularly close to you, but not close enough so that we can get you on screen. And then I'll unceremoniously pop you off the stage. All right. So welcome. Would you please put your hands together for our first speaker today, Mr. Chris Golson.
Good morning. So when Stu McDonald and Jackson Crabb from Vertical Events came to our office back in August and outlined their vision for a new conference based in Busselton, we jumped at the chance to be involved. And just over 2 months later, to have 400 registered delegates and 36 companies presenting over the 2 days is a testament to the strength of their networks and relationships in Western Australia. I'd also like to acknowledge Dave Tasker of Chapter 1 Advisors for his significant contribution to getting this conference off the ground. So on behalf of Canaccord Genuity, it gives me great pleasure to welcome you to the inaugural Southwest Investor Showcase. We're very proud to be playing a role in bringing this event to the Southwest and what we hope will become an annual fixture and a destination conference for both WA and interstate visitors for many years to come. The 36 companies presenting over the next 2 days, including many of Canaccord's own clients, represent some of the most exciting investment stories in Australia today. I'm confident that these presentations, along with some input from our own Canaccord staff, will hopefully provide you with some useful insights and investment ideas. Canaccord's Busselton office has been servicing clients in the Southwest for well over 20 years, and we're firmly committed to growing our business in the region even further. Our local wealth advisor team have considerable experience and expertise in all parts of the advice chain. And if you're located in the Southwest and you're not already a Canaccord client, I recommend grabbing one of the team for a chat over the next 2 days, or you can contact our Busselton office directly. It's certainly an exciting time to be at Canaccord. Our capital markets team is the most active in Australia, providing exclusive access to a diverse range of new issues, initial public offers and other investment opportunities. Additionally, our team of research analysts cover over 1,000 companies globally, including 150, more than 150 now on the ASX, with broad industry coverage across key growth sectors and the global economy. Just last week, we announced that Elise Shapiro had joined our equity research team in Melbourne as part of our global objective to expand our coverage in the healthcare sector. We have 104 wealth advisors across 7 locations in Australia, providing advice and services on 23 billion of client assets. We service on both domestic market and international markets, and our capability in strategic financial planning advice continues to strengthen, and our recent appointment of Herc Paniatakis as our National Head of Advice is further demonstration of our commitment to this area. Broadly, the industry we operate in is shrinking, and the barriers to entry are increasing. Nationally, the number of registered advisors has dropped from a December 2018 peak of 28,000 to below 19,000 last month, and it's tipped to fall below the 15,000 mark. Just yesterday, the Commonwealth Bank announced its final withdrawal from the wealth advice industry, officially ceasing services by November 30. In what has been a somewhat turbulent time in the industry, Canaccord's enjoyed relative stability, a clear strategy, and an appetite to provide our clients with excellent and consistent service. We will continue to invest in our staff and infrastructure to meet this increased demand. Thank you to the sponsors, in particular Vertical Events, Chapter 1 Advisors, BDO, Atomic Group, Stein Price Paganin, and Coop. Thanks, Lockie. I'm now going to introduce you to Greg Golson, our Head of Private Wealth Research. Greg has over 25 years experience in investment management, capital markets, and investment research. He is a member of our investment committee. Greg methodically briefs our wealth advisors right across the Australian network each morning prior to the market open. It's on what will drive markets on that particular day, week, or month. He is crucial to shaping our thinking, helping us digest and dissect markets, and providing investment ideas. This morning, he will share some of these insights with you. Thanks.
Thanks, Chris. Good morning, everyone. I must say what a pleasure it is to be doing these in person again after 2 years of online webinars and Zoom meetings. So it's a pleasure to be, and hopefully there's some sense of reality or normality coming back to our lives. I've got a lot to go through and I don't have long and I don't want Chrissy bundling me off the stage. I'm going to go through pretty quickly. Just a normal disclaimer, what I'm giving to you today is general advice. If you'd like some specific advice, please go and see your financial advisor. What I want to talk about is some of the headwinds that the market's been overcoming. The markets have performed pretty well the last sort of 3 to 6 months. They've been what we call climbing the wall of worry. They've been concerned about some of these issues, but they've been kind of ignoring them, hoping we're going to get through them and moving higher. So you've had some of the major equity markets in the US back to, well, at record highs, and the Aussie markets, back at pre-COVID-19 levels. So you can see that, as I said, there's been a number of headwinds. There's been a very good recovery from the March 2020 lows, but there's still a few issues to be looking at. I'll be glad when I don't have to talk about COVID-19 anymore, but I suspect that'll be quite a while before we're not talking about COVID. I think there's some reasons to be optimistic. Vaccination rates globally are getting up around the 65, 70% levels. We're starting to see the number of new cases come off. There are pockets, though. We're seeing a bit of a pickup in Europe, and particularly UK. They went very hard on the reopening once they got to 80%, and they're starting to see a pickup in cases now. I'm a bit concerned about what happens with Northern Hemisphere winter and whether we see another, probably a fourth wave of COVID infections and the flow-on effect that has on the economy as people move back into lockdown again. But I think globally, there are reasons to be optimistic. Inflation, that's, I guess, the catch cry of the last little while. I think a lot of this inflation, the Fed Reserve thinks this as well, is transitory. It's been demand driven. As people went into lockdown, there was a massive amount of fiscal stimulus pumped into the economy. People couldn't spend any money on services. They couldn't travel overseas. They couldn't eat at restaurants. They couldn't go out to bars. What did they do? They spent all their time online shopping. So the massive demand for goods, that's overloaded the supply chain. The cost of shipping a 20-foot container around the world now has more than quadrupled. In fact, I think it's gone up 8 times in the last 2 years. So there's a huge amount of costs that have come into the system that are now being passed on in the form of inflation. So it's probably already peaked. We're not sure yet. There is some systemic inflation in the market. Wage inflation has been particularly strong in the US. A lot of US workers are getting massive stimulus checks. There's no incentive for them to work at $12 an hour. They're getting more than that in stimulus checks from the government. New Zealand just recently raised interest rates because they're seeing wage inflation coming through. So there are some systemic forms of inflation, but we think the bulk of them are transitory and will mitigate, but it might take until the middle of next year before that happens. Rising interest rates. Let's go back 18 months ago when we had the first global headlines about COVID. And no one really knew the implications of what that would have on the health of the global population and also the global economy. Everyone sold every asset they owned. Didn't matter whether it was shares, bonds, gold, silver, you name it. Everyone sold it as they wanted to cash out. And what does the central bank do when you get a massive drop-off in economic activity? It hits the central bank emergency monetary policy settings, which is really only 2 steps. You cut short-term rates almost to zero. That keeps the cost of funding between the banks very low, so it encourages them to keep liquidity in the system. And also then you start buying bonds. What that means is you basically provide liquidity for the bondholders if they want to sell their bond, that there's always a buyer of last resort standing in the market. And when you've got a buyer of last resort, what happens? Prices go up, which means yields come down, which means it's still very cost efficient for corporates to borrow money because they're borrowing them at very low rates. That'll encourage them to spend money on working capital, inventory, growth. It'll keep the companies going during this quiet period of time. Fast forward to now, those emergency monetary policy settings are not necessarily needed. You've seen a massive economic recovery, albeit patchy because of lockdowns and what have you, but they're starting to unwind those now. So we're expecting the Fed will announce at its November meeting, I think it's the 6th of November, but I could be wrong, that they're going to start tapering their bond buying. That's the first step of that process. And then the expectations are that we'll see a rate rise or 2 rate rises by the end of 2022 out of the US economy. They may come earlier because if this inflation doesn't prove to be transitory, you may see the Fed actually have to act sooner rather than later. That's going to have a significant impact on the equity market potentially. We see interest rates and US bond yields probably moving up to sort of 1.85 to 2%. But if they go well above the 2% level, you can see here that in the US break even, they haven't really factored in significant inflation yet as to previous cycles. But if they do, that will have an impact on equities because everyone uses the risk-free rate, the bond yield, in their DCF valuations. So if your risk-free rate goes up, then the return that you need to achieve on your equities goes up as well, which can tend to actually see stock market equities pull back as a result of that. And, you know, growth has been good. The IMF recently downgraded the growth of 2021 from, I think, 6.4 to 5.9. But you can see we've had a pretty good recovery from the lows of 2020 of -3. And we're probably, you know, back on track to sort of 3%, 3.3% medium term. That lowering of growth should also lower some of those inflationary pressures as well. So we don't see a 1970s stagflation environment. That was driven by low growth and high inflation, all price crises. We're seeing this as being a demand-driven inflation, very different. The US economy, the global economy, they're all doing quite nicely. Even the Australian economy should recover very strongly in the next quarter once, well, now that Sydney and Melbourne have come out of lockdowns. And whilst, as I said, core inflation, we don't see it being sustainably high. But what we are looking at is we think that reflation recovery trade is very much the next play for the next sort of 12 to 18 months. Typically, that means financials, materials, energy, basic industrials, and consumer discretionary. Now, that's the sector that the Australian market is very big on. The US market's very much tech-driven. So the top 5 stocks, the FAMGA, account for 25% of the market cap of the US market. They are going to be the most impacted by rising interest rates because they're long duration growth stocks, whilst we have a lot of cyclical plays in here. So that basically accounts for, actually I might just go back. That basically accounts for the blue chips of your portfolios, your banks, your BHP, your Rio, your Woodside, your Santos, your Borals, your Blue Scopes, maybe even your Wesfarmers as well. Those are the key parts of your portfolio that we think should do well over the next 12 to 18 months. But what about if you want to add a little bit of extra alpha into the portfolio? And that's what some of the companies that are, well, in fact, most of the companies here that are presenting today are trying to get in on the next megatrend. And these are long-term structural shifts that transform economies. So they're not cyclical, like the yellow bar, but they start off slow and they have long-term transformative type of economies. So getting in on these companies can add significant amount of alpha to your portfolios over the medium to longer term. So we think there's 4 key megatrends: tech, society, health and wellness, and environment and resources. Let's have a drink. So technology is the easiest one. Since the Industrial Revolution, technology's been advancing our lives, lowering the cost of goods and services. That's going to continue. Robotics and automation. I mean, robots have been working in car factories for 30 odd years now, but you're now seeing warehouses employ full automation. You know, all of Amazon's warehouses in the US are fully automated. So that's a growing trend and is only going to continue. Data security. We all live our lives digitally now, not just from the point of view of protecting a consumer, but protecting corporates, protecting governments, and protecting countries. You know, you could argue that the next war will be fought in cyberspace rather than physically because so much information is stored digitally nowadays. And we've all heard about those corporations that the databases have been hacked and people's personal information has been released to hackers and then sold and then used for phishing emails and those sorts of things. So data security is key. Artificial intelligence, that's actually gaining a lot of speed already. So is machine learning, natural language processing. There are already companies out there that will screen company announcements and company presentations and look for certain languages and then identify themes that people can trade on the back of. So that's coming. Cloud computing, it's already here, but you're now starting to see a lot more server space being developed where people can, rather than using their own server, actually compute on the cloud. Fintech and blockchain. The big banks have had it so good for so long. The fintechs are really sort of trying to disrupt that space. And look at the fact that the Commonwealth Bank's now offering a buy now, pay later product. Who could imagine they would have done that a few years ago, basically cannibalizing their credit card business, but they see it as a major threat. And, fintechs haven't really taken off significantly. They've always struggled for scale and a number have been closed down, but a number have been bought by the banks. So the banks see the threat that's coming from fintech. And I think blockchain really sort of adds on to that. The whole prospect of decentralized finance, from traditional finance to decentralized finance, is an area that I think is only going to grow in popularity. And then as we get better tech, we can do more stuff with our phones. Web 3.0. So at the moment, the internet's owned by Facebook, Google, Amazon. They own the internet. Web 3.0 is a movement to decentralize ownership of the internet back into the community. So I imagine most people here use Facebook. You probably consider yourself a Facebook user, but you're not. You're a product of Facebook. A user of Facebook is the corporate that pays to advertise on Facebook using the data that they've paid to collect from your Facebook profile. They're the users. We just get to use it for free, but then pay the cost of being hit with all those adverts. So there's a movement towards decentralizing the web, like it used to be in Web 1.0, that was owned by the community. Society and lifestyle. As a fun fact, Japan buys more adult nappies than children's nappies. It's just aging populations, social demographics. But this is interesting, the population in India is getting younger. I was reading a stat the other day, almost 1/3 of the world's population is unbanked. They don't have a bank account, and they can't get a bank account, yet they all have a mobile phone. So potentially they will be able to interact with the digital economy a lot more effectively going into the future. That's where fintech, blockchain also comes into that. You'll be able to have an online identity secured on the blockchain that will enable you to do what you haven't been able to do in the past. Basically live a subsistence living, a hand-to-mouth living. Demand for daycare as more women enter the workforce. Age pension funding. We've got a growing population of older people, a smaller population of working people. How are we going to fund that deficit there? What we need to look at doing to improve the superannuation industry. And then aged care is a very obvious one. That's very much a growing industry. That leads me on nicely to health and wellness. So basically, healthcare is the fastest growing industry in the world. So countries spend more, it's growing faster than GDP by most countries. Obviously, healthcare for the elderly is the most obvious one. So those companies that are really able to to look to prolong life, both from a physical but also from a mental point of view. In that particular perspective, obesity is a growing trend across all developed nations. I mean, Noom is advertising every third ad on TV at the moment. The amount of companies are advertising fitness equipment. This is a very much a growing industry, and I think one that is worth looking at participating in somehow. And then, of course, biotech, cures for cancer, cures for Alzheimer's, all those different factors, and then even into genomics, identifying people's DNA that might be susceptible to certain diseases, and maybe whether we can actually change some of those. I guess this is the one that we're all most aware of. It's probably the most alarming. I think even the Nationals have admitted there's a climate change issue. Thanks, Chrissy. And it's one that now we're starting to get some activity on. Clearly, battery technology is the fastest evolving technology, where the demand profile is the most obvious, with a lot of car manufacturers already committing to fully electric vehicles by 2030. So demand for copper, nickel, lithium, rare earths, all of those components that go into battery technology, I think will skyrocket from here, at least a doubling in demand. It's one of the key areas that BHP's identified with its nickel and copper exposure, and also that Rio has identified with its lithium exposure. So I think those are some of the key drivers of some of these mega trends going forward. Food security, another one, being able to farm on arable land as the global population grows. BHP has identified that, hence their purchase of that phosphate project in Canada. Very much a long-term view, but really phosphate is one of perhaps the least understood sort of commodities going forward in terms of being able to sustain food security. Recycling, I won't touch so much on that, but it's because I'm worried about time. Water recycling, and then hydrogen. Hydrogen is the next big growth opportunity in my mind. The ability to transform from diesel-powered trucks, trains, and planes into hydrogen-powered is huge. I just don't see the battery technology being utilised in a truck, because the weight of the truck will be huge just with the batteries alone. But also power generation through hydrogen as well, as I think the next step forward. So Fortescue are doing that with their FFI business. Woodside's already announced they're going to do a blue hydrogen plant in Kwinana. So I think that's also the next potential massive growth opportunity. That's it. Thank you.
Thank you, Greg. That was very, very impressive. Well done. A great way to open the conference too. So we've got those 4 megatrends to keep an eye out for. We are absolutely packed in this room. We do have a couple of rows down the front here. So please come on down. We have no restrictions. And I'd rather you were coming down and sitting and were settled, because we have a lot of fantastic presentations to get through. And what's your name, sir? Jim. Okay, so and Jim has not got any issues that we know of, do you, Jim? You'd like to meet some new friends. Are you from here?
I'm Perth.
You're a Perth boy, so would you like to meet some new friends? Fabulous. Well, Jim would like 5 new friends. So if any of you would like to come down and sit next to him, that would be very lovely, because I hate to think that Jim has travelled almost 200 kilometres and hasn't met any new mates. We'll get... Good, that's okay. We will get to know one another as the next couple of days goes on, but we're running low on time, so I'll keep my banter to a minimum. So those 2 of those mega trends that were just mentioned then by Greg, I'm going to look at society and lifestyle and health and wellness. And our first presenter today, thank you ladies, fits into 2 of those categories, 2 of those mega trends. And you're going to find the raw materials for our first presenting company this morning, not very far from here, but I cannot tell you exactly why, because they are the producer of the first medicinal cannabis in Australia, so the first local medicinal cannabis. The name is Little Green Pharma, and for them, the patient's needs are a priority. They drive their focus on providing a range of accessible and natural therapeutic solutions for patients in Australia and overseas. And I'd like to welcome up to the stage to tell us more today, Mr. Paul Long, and Paul is their Chief Executive Operating Officer. Welcome, sir.
Thanks, Chrissy. Good morning, everyone. What a wonderful turnout. Slight correction, Chief Operating Officer, still aspiring. We'll just begin with another one of these. I think you'll see 36 of these over the next 2 days, so we won't go into that one. A quick background of Little Green Pharma. So as Chrissy mentioned, we are a local producer. So back in 2017, we received the 3rd license in Australia to cultivate and manufacture medical cannabis. We had a really clear vision back in 2017, and that was to become the very first company in Australia to provide locally grown medicine to patients, to Australian patients. Very proud to say in August of 2018, we successfully achieved that. That really set us up as a company. It set our brand up as a company, enabled us to have a conversation with our key stakeholders, namely doctors in the industry. And we sit here today, and this industry is definitely moving in the pattern in which we all thought it may, or we hoped it may, back in 2017. Little Green Pharma alone have approximately 20,000 patients that have now used our product since our first patient in 2018. We're a vertically integrated company and very strategically chosen to be vertically integrated at this stage, and that's paid dividends to date. And we have operations both here in the Southwest and more recently in Europe, in Denmark, and I'll talk a little bit more about that today. But yes, our facility here is probably 10 to 15-minute drive from here in a secret location, but an indoor facility. And I've got some images I can share with you today. Quick snapshot of our corporate overview. We've had some fantastic support on our register. We have just over a third of our register with institutions, the largest of those and our largest shareholder being Hancock Prospecting, holding just over 26 million shares. We have a really well-aligned board and key executive in the organisation, which is critical for key shareholder decisions. You can see there we've got over 12% that sit with our board and our key executive. And we have a really strong cash position at the moment is the other thing to point out on that slide. Yes, we're definitely motivated by shareholder return, absolutely. But at the core of what we do is about transforming patients' lives. We've made some decisions on our journey that have been absolutely focused around the patient. But we have to remember this industry is one in which we're helping people that are at the end of their tether. They've tried traditional medication. It hasn't worked. They've gone to their doctor. They've got no other option. They've got perhaps chronic pain. And this is a last resort option. So as organisations in a growth industry, that's fantastic. And shareholder returns are clearly important to us. But we must always look through the lens of the patient. And as an organisation, we've done that from day one and will continue to. Now, a quick snapshot of our ESG commitment. Like I said, at the core is the patient. So our social commitment is strong. We have 65% of employment as females in our organisation. Very different to today's audience, I must note. But we use this model up here, which is the 6-dimensional model of impact. It's a Boston consulting model, pretty simple, to look at the areas where we do need to improve. One of those, and a good example, was on the environmental side, and we just recently committed to 100% renewable power source for our entire operations here in the Southwest, and we're committed to transferring to 100% renewable power source for our entire operations in the Danish operation within the next 12 months. As I said, we sit across the value chain. So on the cultivation side, we have a site here, as I said, just very local, an indoor facility, and I'll show you some images in a minute. But we've also got a large site up in Denmark under a glass house. The combined site of our cultivation gives us up to 25 tonne of biomass per annum, which is a really significant volume for us to be able to grow into to ensure that we've got consistent quality products for patients around the globe. And that was critical to our growth. On the manufacturing side, we were one of the first companies to bring in-house a GMP, so good manufacturing practice facility, and that's what's required to produce a medicine in this country. And we're very fortunate in Australia that our GMP environment is mutually recognised into Europe. And in comparison to a few of our Canadian competitors and the big, multi-billion-dollar companies in Canada, they didn't have that mutual recognition. So we saw a fantastic opportunity as Little Green Pharma, as one of the early movers here, to really focus on the European market. And I will expand on that as well. At the heart of what we do is really our research and development and our product development. We take a view in the pharmaceutical sector that the future is drug registration. So we're all operating, the industry is operating at the moment under special access scheme where people are able to access products as a last resort. If they've tried other medical products, patients are able to. However, we do believe that there's lots of research to be done, and the end result of this game will be drug registration. So we have a very, very clear pathway to drug registration. Patient access and education. In 2017, when I started with Little Green Pharma, having a conversation with a doctor was a very, very difficult thing to do. There was just, the conversation was, there's no research, it's not working, we're definitely not trying that. So to try and find the odd doctor to talk to was really, really difficult. The tide has well and truly turned, and we found with doctors, they didn't want to be the first to prescribe a product that was different and stigmatized for 50 years before, but they certainly don't want to be the last. So we're certainly in this really interesting spot now where a lot of doctors, a lot of GPs are transitioning across to at least trying this product for their patients. And Little Green Pharma have really led the way and really educated on behalf of the company, but on behalf of the industry, to really open up the opportunities for patients in Australia. Sales and distribution is absolutely critical for us, and an absolute core focus in our key markets. In Australia, we are one of the largest by market share here in Australia. We have a direct-to-patient model, we have a number of distribution partners, and we have several distribution partners in other key territories, in particular in Europe. That's actually an image of the cultivation facility that we just recently acquired this year in Denmark, but I'll start with our Little Green Pharma site. So we made a decision when we built this site, just not too far from here, that we would build an indoor site, and we'll build an indoor site which would be the highest possible quality and produce the highest possible quality product. And the reason for that is, when you look at the ability to send product into, in particular, Germany, one of the biggest medical markets in the world, you must meet a very, very tight specification limit. And we took the view that to meet that limit, you must control your environment. So our environment, when people walk through, and we do investor tours through our site, most people sort of stand in there and go, this feels like a hospital, it looks like a hospital, smells like a hospital, definitely doesn't look like the cannabis facility that you think you would have in your head. Highly controlled environment, producing the same medical product every single time we do a harvest. So the cultivation side here, we can produce 1.5 tonne of final finished flower for the Australian and European market, and 3 tonne of biomass. So the other 1.5 tonne is used in our production of oils. Our GMP site right next door to our cultivation site is licensed to produce flower as a finished good. We dry in EU GMP conditions. It's licensed to produce oils, tinctures, and active pharmaceutical ingredients. And we look to expand the variety of what we're selling, or what we're producing, out of that site. The Danish site, essentially what we did about 12 months ago, we realised that the market was growing as we'd hoped. Demand was continuing to grow, and we realised that pretty soon we were going to have a capacity issue. We had the option to look to expand what we were doing, but the time and effort and dollars involved in doing that meant that we looked for external opportunities. So the previous owner of this world-class site in Denmark spent a significant number on building out this site. This site has just over 21,000 square metres of glass to grow cannabis, and a 4,000 square metre GMP manufacturing site. So it's a significant, one of the biggest medical cannabis sites within the regions in which we operate, and it was built with no expense spared. Fortunately, Little Green Pharma were able to acquire that site at a fraction of the cost for cents in the dollar. That site is operational, it's ready to go, it's already delivering into the Australian market and into the European market, and has GMP status for the whole of Europe. So what this gives us combined is security of supply. And we've absolutely seen through COVID in the last 2 years that there has been a major problem with security of supply and consistency of supply for patients. And it's really difficult under the special access scheme in Australia. When a patient gets a script and then the supplier runs out, you've got to go through this whole process to get another access for that particular patient. So what we've really tried to do is ensure that we've got a consistent supply for all our patients as we continue to grow. So these 2 sites give us that. Strategic positions close to market is really critical as well. The European market for us is our core focus. And so to have a foundational opportunity to deliver high quality product in Australia for the Australian market and into the European market from Denmark has been a really important decision. I touched on our R&D and a quick summary of this page, but we under the special access scheme at the moment, we have flour and oil products. What we've seen in the growth of the industry is that oil became the preferred script from a doctor, or access from a doctor for patient. But in the last 6 months, access to flour as a finished good has risen significantly to the tune of 40% of the market now. So we've been well set up to deliver into that market with our flour production in our indoor facility just here, as well as into the German market. But we do take the view that there will be new emerging products. So we're constantly looking at products to meet the market out of our R&D platform. The slide, the top of the graph there, you'll see our scientific validation studies. We invest in validation studies mainly via product, and we do those primarily for building new data, building information to talk to doctors about, building more evidence. And this industry still definitely needs more clinical evidence, so we're committed to driving that. The bottom section is really the key. These are the areas that we'll be focused on our future drug registration. And this is where we think the market will evolve to in the medicinal cannabis space. Earlier this year, one of the things we continually hear throughout the 3 or 4 years we've been talking to doctors is they do want more information, and it's okay to show them a bit of information that comes from a study in Israel and perhaps Canada, but they want information here on our patients in Australia. So we embarked on developing an initiative called the Quest Initiative. This study was run by the University of Sydney. We provide discounted medication for patients here in Australia to access and be a part of Quest in exchange for quality of life data, really simple questionnaires. That data, our goal with this was to become the world's largest quality of life study, and we have successfully achieved that. And there's a big study in the UK that's been trying to do a similar thing for about 3 or 4 years. And within a year, we've got more patients within the Quest than they have, which has been a great result. We expect to see some fantastic data out that by mid next year. Okay, quick snapshot on just some of our key metrics. The top one there, our revenue. So our 2020 revenue was 2 million. Our 2021 financial year revenue was 7.7. So really good growth for those 2 financial years. And if you look at just our quarterly, which we announced this morning, $3.2 million just for the September quarter. So we expect to see another trend and in growth in our revenue this year, which has been fantastic. A couple of the other key drivers, we look at new prescribers, so new doctors is really important. You can see that between 2020 and 2021, we're in that sort of roughly 200, just slightly more new doctors per year. We've really dedicated, you can see in the last quarter, September quarter, there's actually 110 new doctors also that have come on board and prescribed the Little Green Pharma products. That's a key metric we look at. New patients, you'll see there, have gone from in 2020 from just over 3,000 to just over 10,000. So as I said at the start, a combined number of about 20,000 patients currently being prescribed or having been prescribed Little Green Pharma products since 2018. Yes, Australia is our foundation and absolutely a core part of what we do. In fact, our first mover advantage, our focus on high quality medicines and supporting everyone within our doctors and patients, we've been able to build a significant market share. In Australia, we estimate we hold around about 20% of the market at the moment. However, internationally is absolutely key focus, as I said. Poland is an interesting one, 40 odd million people, very few products. Denmark, a great opportunity. France, we're one of only 4 companies to be awarded a pilot study, and with over 60 million people, that is really an emerging opportunity for Little Green Pharma to set up our brand. Key, just finish on a couple of last market growth slides. So you see here the market growth in the number of patients since 2018. Fresh Leaf Analytics just reported a couple of weeks ago that they expect there'll be over 75,000 active patients in the Australian market by the end of this calendar year, and over 100,000 active patients by the end of Q1 next year alone. The addressable market in terms of revenue has been quite surprising to the industry, and you can see that it's doubled, projected to double in 2021 and almost double again in 2022. Total addressable market for Little Green Pharma and the 6 markets we're focusing on outside of Australia is $24 billion at maturity. And a quick summary of why invest in this industry or in Little Green Pharma. I think we saw a boom of cannabis investment, and then no one really knew where that was going to land. And I think what we've seen in some of these stats today has been the growth that we had hoped for. And it does feel to us like we're on the beginning of what is a consistent curve and a product that will be available for more and more patients in this country. Thanks everyone for your time, and I'll be around for the next 2 days and happy to take any questions.
Thank you, Paul. Paul Longer, our CEO of Little Green Pharma. Next up on stage, we're talking Lithium Energy. And Lithium Energy is pursuing battery-related applications for graphite, which is sourced from its exceptionally high-grade Burke Graphite project in Queensland. It's also set to commence exploration work at its Solaris Lithium Brine project, which is located in the heart of South America's Lithium Triangle. Would you please welcome William Johnson? And William is the Executive Chairman.
Thank you very much. Can I get some help in getting the presentation going, please? Okay. Sure. Look, we do actually. It's funny you mentioned that. Yeah. So the reason for the prop here is that we have a draw on our stand. So anyone wants to come down and talk to us about Lithium Energy, put your card in our bowl or give us your address and email, and you may walk away with some Lithium Energy of your own. Here we go.
All right, we're on.
Thanks very much.
Put your hands together, please.
Thanks and welcome everyone. So the global energy transformation from fossil fuels to renewables that everyone's talking about. Well, it's here. And I guess one of the key questions for you as investors is how can you invest to get the best exposure to this sector? And in the next 15 minutes, I'm going to attempt to convince you why investing in lithium energy is a great way to get exposure to this transformation. In brief, Lithium Energy is was the only company on the ASX that has significant direct exposure to the two critical ingredients for lithium-ion batteries. That's lithium and graphite. We're also uniquely positioned to not only mine these critical minerals, but to create significant additional value through the development of value-adding downstream processing opportunities right here in Australia. We've got a lot of expected news flow happening over the next 12 months. So there's plenty of opportunities for some near-term positive upward movement in our share price. So Lithium Energy was born in May this year with the help of our friends from Canaccord. We raised $9 million, principally to advance our two key projects, which are the Solaris Lithium Brine project located in Argentina and the Burke Graphite project located here in Australia in Queensland. Now, since the IPO, our share price has more than doubled, which we think is great. I guess a feedback from our investors who value the unique value proposition that Lithium Energy currently presents. And for those of you here that took advantage of investing at the IPO and since then, I'd like to take this opportunity to thank you all very much for your support. So this global energy transformation, it's all about the electrification of mobility and grid storage, and both of these industries need batteries. Lithium-ion batteries are the dominant technology at the moment for these industries and look set to remain so for the foreseeable future. Lithium-ion batteries need lithium and they need graphite. And so the demand for both of these essential minerals is set to skyrocket over the next decade. The increasing demand for lithium and graphite is principally being spurred along by government policies and commitments by all the major car manufacturers to transition away from petrol and diesel engines to electric engines. This increasing demand has recently been reflected in the increasing lithium carbonate price, which has more than doubled since late 2020. This is a picture taken of our Olaroz lithium brine project in Argentina. The project is located in the heart of South America's lithium triangle in Argentina. And South America's lithium triangle is where the world's largest reserves of lithium are currently found. Argentina itself is recognized as being the location where one can produce lithium carbonate at one of the lowest points on the lithium carbonate cost curve. So it's a very attractive location for a lithium brine project to be located. One of the great things about lithium brine projects is that they typically use a lot less carbon and are a lot more environmentally friendly than extracting lithium from spodumene, or what case we do here in Australia. It's a relatively simple process. The lithium-rich brine is pumped up from subsurface aquifers. It's left to evaporate in large evaporation ponds powered by the sun, which essentially concentrates the lithium into a more concentrated brine, which is then processed into lithium carbonate. Now, you've probably all heard of Orcobra. Orcobra is an ASX-listed lithium company, and they're also based in Argentina. Their main asset, the Olaroz facility in Argentina, is currently producing about 25,000 tons of lithium carbonate per year, while our project is located right next door to Orcobra's on the same salar or salt lake from which they're extracting their lithium. We have an exploration target for our project of up to 8.7 million tons of lithium carbonate equivalent, which is comparable in size to Orcobra's published JORC resource of 6.4 million tons. We know that their operation is highly profitable. They've got a market valuation of about $6 billion, a large part of which is attributable to this resource. So we're confident that if we can confirm that we can tap into the same underground aquifer from which they're extracting their lithium, then we're going to be in business, and we'll be targeting hopefully a valuation comparable to theirs. Here's another shot of of our concessions and the Olaroz Salar looking south, and you can just make out the Olaroz production facility, Orcobra's facility in the south there, which is located about 20 kilometers away from our concessions. So why are we so confident that we think we can replicate Orcobra's resource? Well, there's a lot of historical work that's been done by Orcobra, Lithium Americas, who also operate in this on the Olaroz Salar. And we've spent a lot of time looking at all their historical reports of geophysical data, gravity readings, and our interpretation of their work convinces us that the major lithium-rich deep sand units, which they're currently targeting for their production, extend under the tenements that we hold. These pictures here illustrate this really nicely. The dark blue colors there are the lithium-rich brines, and you can see how they extend to the left of the pictures underneath some of our concessions, which are highlighted in green. So what's next for Olaroz? Well, we're about to embark on a very intensive 6-month exploration program with geophysics and drilling, in which we're looking to chase our exploration target. Moving on now to graphite. The Burke Graphite deposit is located in Queensland. What's one of the unique properties about this deposit is it's very high grade. The average grade of the deposit is approximately 16% of total contained graphite, which makes it one of the highest grade graphite deposits globally held by a ASX-listed company. We have we've defined already over 1 million tons of contained graphite, and we have a lot of exploration upside potential from a neighboring concession which we hold, which we call the Corella Prospect. As well as doing the exploration work, we've undertaken a lot of work in conjunction with Australia's CSIRO and the work that they've undertaken has confirmed the suitability of our graphite for use in electric vehicle batteries. We've also managed to produce graphene out of our graphite, and graphene is now increasingly becoming a very important additive also for electric battery applications. One of the opportunities that we're pursuing in particular, though, is the production of purified spherical graphite. We're looking to construct potentially a manufacturing facility for purified spherical graphite in Townsville. Why purified spherical graphite, or PSG for short? Well, natural graphite typically sells for around $500 a ton. Purified spherical graphite can sell for up to $7,000 a ton. So it makes a lot of sense to move up the value chain and increase the value of the material that we have at the deposit. There's significantly more value to be gained from moving up this value chain to PSG production. Now, PSG is used as an anode material. Most of it comes from China, and the production techniques that are used in China are not terribly environmentally friendly. There's a lot of toxic chemicals which are produced. Our goal is to meet the growing demand for more environmentally sustainable production of PSG right here in Australia, where we've got a very supportive government and a number of emerging battery technologies and manufacturing hubs that are currently being developed both here in Western Australia and also in Townsville. So next steps for the Burt graphite deposit. Well, we're continuing our work with the CSIRO. We're investigating the development of a PSG manufacturing facility in Townsville, and we're also looking to expand the size of our resource through some further exploration work at the Corella tenement. I won't dwell too much on this slide, but most of the team, or a large part of the team, myself, Peter Smith and Victor Ho, are all here today. So please feel free to pop by and have a chat with us during the conference. Panac is a Argentinian company. They're a 10% shareholder in our lithium project, and they're providing a lot of the on-site administrative and technical support for our exploration project over there. So I think I'm running a bit ahead of time, but to sort of wrap up, I hope I've convinced you that lithium energy is a great way to invest in the global energy transformation. We've got exposure to both lithium and graphite, exposure to environmentally sustainable downstream value-adding opportunities, and a substantial program of near-term news flow planned. From our perspective, we think there's no better time to come aboard and invest in lithium energy. And if you're not convinced, please feel free to come down and talk with us on the stand. And as I said at the beginning, put your name in the hat, and perhaps you might walk away with some lithium energy of your own.
Done. Thank you very much, sir. Would you please put your hands together for Ian Johnson, Executive Chairman. There'll be a big fight. When are we going to draw that one? Tomorrow? We'll draw that one tomorrow, but you need to be in the room to get it. All right. One of WA's best known horses. It's not a racehorse. He's the local bouncer at the pub in a place called Kokanee. You might have heard of him. His name's Willie. Now, not far from that tiny little goldfields town is Kokanee Gold Project. Now, that is the flagship project for Metalicity. It's 180 k's to the north of Kalgoorlie. It's exciting. It's underdeveloped. What potential does it have for you in your portfolio? Let's welcome up to the stage Justin Barton. Justin is the Managing Director. Welcome, sir.
Thanks, Chrissy. And before I start, I've got a bit of a hoarse throat, and it's not because I spent a night at the Kokanee Hotel or a big night last night. I actually am recovering from a bout of pneumonia, so please bear with me. Okay, so a quick corporate snapshot, who we are. Obviously, I'm the CEO, Finance Director. I've been there for about 5 years. Our Chairman, Andrew Daly, was one of the founding directors of Metalicity, and Jason Livingston is our technical director and has been behind all our exploration activity that we've done so far at the Kokanee project. So Kokanee area is something we think is definitely an emerging gold district. And there's certainly some exciting activity happening around the area at the moment. We own a 51% controlling interest in the Kokanee under Emyria joint venture. We own about 20,000 hectares of land in that area. 11,000 of that is the Kokanee area, which we're focused on at the moment. We only farmed in to this in 2 years ago. Within that 2 years, we've earned our joint venture interest. We've drilled over 368 holes for over 34 or 33,000 metres. So we've done a lot of work in a short period of time, and I'm really excited by what we're seeing. We've put out an exploration target, as you see on there, between 294,000 and 967,000 ounces. And we're in the midst of finalising up our maiden JORC resource over 3 of our tenements, which we've been focused on over the last couple of years, being the Champion, Leopold and McTavish areas. Okay, so as you can see from the map there, we're a substantial landholder in this district, and we think we sort of got the jewel in the crown. As you can see, Genesis is around us as well, and you've probably seen some interesting, exciting news by them over the last week or so, which sort of just adds further excitement to this developing area. The Kokanee Gold Project is made up of 8 prospects. There's generally been a fairly fragmented ownership in this area, and we've sort of come in trying to pull it all together, and we've been slowly doing that over the last couple of years, and we'll continue to look to do that. But what got us really excited about this was, sort of on the back of, the Bellevues and the Spectrums, and we thought, this is another opportunity of historic workings where, there could be something really exciting here. And, the Cosmic Gold Mine, as you can see, you produce, 360,000 ounces at, grade of 15 grams a tonne, which are, just really phenomenal, exciting numbers. And, it hasn't been looked at and developed or explored, very much, since that time, and as we're seeing from the work we've been doing to date, it's, we're hitting fantastic gold numbers, and there's a couple of highlights there down the bottom of some of the numbers we're hitting. Each time we're going out there, we're hitting something. So it's really just building on our story and the excitement around the area, and we, we're really excited by what potentially can happen. We've also identified another 21 targets in this area over 8-kilometre strike, which we're looking forward to putting some more holes in. So the McTavish is the one one of the 8 prospects that we've been working on recently, and we've sort of hit some bonanza grades, and this is our last sort of round of drilling. We're actually out there drilling this again now, following up. Also, we had some issues with assays, as most companies had over the last 12, 18 months. And we hit some fantastic grades in this area, and we're going back to re-drill this, and we're there at the moment. We've just got the RC and we've got the diamond starting at the moment. As you can see, it's some of the grades there we've hit. The McTavish is defined over an area of about 300 metres at the moment, but it's still open for 2 kilometres to the south towards our Leopold project, which I'll touch on shortly, and sort of open at depth as well. So it's really exciting little prospect, and it's continued to bear fruit for us, and we're really excited about the drilling we're doing at the moment, which is sort of filling that gap, 2 kilometre gap between Leopold and McTavish. So as you can see on this one, you can see our McTavish and Leopold projects highlighted on this diagram. So there's that 2 kilometres of strike between the two that we're focused on. We've also identified another 5 target areas around McTavish itself, and that's where at the moment that's where we're drilling, and that's where we're sort of focusing our attention. But there is, like I say, 2 kilometres of strike, which we think you can get some exciting results from. The Leopold prospect, obviously to the south of McTavish. Once again, this is a long section view of Leopold. Now this is defined over a kilometre, and it's on a depth of only 130 metres, and that's what we're finding with all our prospects. They're all very shallow depths, and which is sort of exciting to be able to progress. So these are all on mining licenses as well, which gives great optionality moving forward if we want to do anything. And what's actually showing, from the Leopold prospects and the drilling we're doing at McTavish, it's that we're getting repetition of these high-grade lodes coming through, and that's what we expect and hoping to achieve with that drilling, that 2 kilometres of strike between Leopold and McTavish. So as you can see, some of the great best intercepts are received at Leopold, and we've also started, you can see there, Leopold North, we've stuck a few holes in there as well, and 17 of those 22 hit significant intercepts, and so it's just reaffirming that this is really a developing and underexplored area, and there's still a lot of exciting opportunities here, and we're seeing with that with the announcement of Genesis as well in the area. So this is the focus of our drilling the last sort of last 12 months, and where we're working for at the moment. Let's go back. So Champion, this is the third prospect that we're working on to get our maiden JORC resource out. So Champion is just to the north of McTavish, and once again, this is defined over about 300 metres. It's from the drilling we've done, Metalicity's done to date. It's providing consistent grades over good widths, and just really bodes very well for our maiden JORC resource estimate. So we'll look to continue to follow up drilling on this, and together with McTavish and Leopold, and look, we hope to get our maiden JORC resource out in the near future, just after this last round of drilling is completed. So Cosmopolitan, as I said at the start, is a historical mine that produced 360,000 ounces at 15 grams a tonne. Now this is what we think is potentially the jewel in the crown. We haven't really touched this as of yet. Of the 368 holes we've drilled in the last 2 years, we've only put 12 in and around this area. We haven't really even touched it, and we think there's just an incredible opportunity here. Significantly high grade mine historically, very little exploration work done on it. Nothing done along strike, nothing done at depth. So we're really excited by what we could produce out of this prospect, let alone the others. And as you can see on a couple of the samples of the historical workings, and I note the cautionary statement on the historical workings, but some of the numbers and the assays there are phenomenal. So we're really excited to get back onto Cosmopolitan once we've finished up with McTavish and Leopold, but this is, we think, could be the jewel in the crown, and that's where we're going to sort of probably focus our activities over the next 12 to 18 months. We've identified a few targets already at Cosmopolitan, in and around the area, particularly to the north. We think there's possible strike extension there. So the host rocks are similar to what we saw at Cosmopolitan Mine. So this is really going to be the focus of our next phase of drilling after we finish up with our JORC resource. But the potential of this prospect in this area is really exciting, and like I said, we think it's potentially the jewel in the crown of this area, and we've got a really good holding. We've also got a number of other, so we've got 8 prospects in the area. So Altona, we've done a small amount of drilling. Once again, we're getting great grades. Historically, producing great results. There's, you can see, there's 88,000 ounces at 30 grams a tonne historically. We've done some drilling. We're hitting gold, and so we're excited about that. But like I said, our focus has been on our other 3 prospects, and we'll continue just to develop and work through these. Same with our Mulga Plum, which we acquired as part of our consolidation of the area. We acquired this. We haven't actually put any holes in this ourselves, but but it's something that we will be looking to do a bit of work on over the next 12 months and shore up some more targets and the like. But part of our thing of consolidating this whole area from the past sort of fragmented ownership, we think there's some really exciting opportunities there. Once again, Wandin, another one as well, which we think has got great potential as well to further expand the work we're doing. And finally, Iron, well, once again, we haven't done a great deal of work at this prospect at this point in time, but it's another one that we think's got great potential, and it would just add to the work that we're doing. So what are we doing over the next sort of 12 months or so? As you can see, we sort of own 11,000 hectares of the Kokanee area. We think it's the jewel in the area. We're really excited. It's, we're seeing lots of gold. There's historically significant amounts of gold produced there. We're hitting great numbers, and so for the next sort of 12 months or so, we're going to complete drilling, particularly that 2 kilometres of strike between McTavish and Leopold, which will help finalise our maiden JORC resource, which we're excited to release. And then obviously we look to then undertake an extensive drilling program at the Cosmopolitan gold mine. So exciting times ahead. We've been doing a lot of work. We've done a lot of work to date, and we're really excited by the next 12 to 18 months. The other big area of land we've got, unfortunately, is under plaint at the moment, and our joint venture partners working to defend that is the Emyria. But once again, there's 8,000 hectares there. Historically, some great results, and once that's all sorted, we're pretty excited to be able to get on there and see what we can do. But it's also another large chunk of land in that area that we're looking to work on. And I suppose finally, the last thing I want to just touch on is we've been having a little bit of fun the last month or so, and we've announced a takeover of our joint venture partner. We think this is a really exciting opportunity for the next shareholders, and also the Metalicity shareholders. We think the potential unlocking of value of the two companies by bringing them together is going to be substantial. And so, we're really excited to put this offer to the next shareholders. We're currently in the middle of that at the moment. We've got a really compelling case to combine these two entities, and everyone we're talking to can see that as well. And so we're really excited for the future of Metalicity and what we can do with these projects going forward. Thank you. I think I'm out of time. Thank you.
Sure, well done. Congratulations. Thanks very much, William. William Johnson and Lithium Energy. Right. Kaolin, it's one of the world's largest known remaining premium primary resources of kaolin is right here in Western Australia. It's actually located 220 k's to the southeast of Perth, and it's actually held by WA Kaolin. To tell you a bit about the planned expansions of that site, would you welcome up CEO Andrew Sorensen? Andrew, welcome.
Thanks, Chrissy. Thanks, everyone, for your attention. It's my pleasure to introduce you to WA Kaolin, and maybe we'll call it Destination WA Kaolin for today. WA Kaolin raised $22 million in an IPO in November, and since that time, we've been very busy building a plant out at Wickepin, which will allow us to process the kaolin by the mine site. Kaolin's probably not well known to many of you, so I'll just take a minute to explain a little bit about kaolin. It's a very interesting market for us because supply is limited, demand is growing. So it's a good market for us to be in. We have a very large resource. We have 30.5 million tonnes in an ore reserve estimate and a 31-year life of mine. We've been at this for a while. We've owned the resources since 1999. We bought them from Rio Tinto, and we've spent $42 million of our own money. And reading that's a little embarrassing, but it's been a great journey for us, and we're very excited to be here now on the verge of having the plant ready to produce. That money we've spent on building a pilot plant and developing the market, and we've got our own bespoke process for producing kaolin. And we've also invested a lot in market development because in industrial minerals business, if you don't have customers, you don't have a business. So we've got offtakes and LOIs for 83% of our first 3 years of production. Kaolin mining is very simple. It's very close to the surface, only a few 3 to 5 meters of overburden, and it's a free dig, no explosives, very straightforward mining. And we published a definitive feasibility study before the IPO, and it had an NPV of $257 million. So it's a very strong case, and that was based on first and second stage of development of our mine site. What attracted us to this new process that we developed is the low capex. We're spending $18 million of that $22 million that we raised to build the plant, and that'll deliver us 200,000 tonnes of capacity by sometime in Q2 of next year. And then we have a staged approach which says that we'll add another 200,000 tonnes of capacity within 3 years. Kaolin, it's a white clay. I've got quite a bit of it on my clothes, unfortunately. That's the way it is. It's a product that's used in a wide range of applications, including paper, packaging, ceramics, rubber, paint, pharmaceuticals, even cosmetics. And the product is also a way to produce HPA. Some of you may know about HPA because there are several companies on the ASX who are promoting HPA projects. We are aware of the technology and we are ready to pursue that technology should it be proven to be successful by some of the other participants. Just a snapshot of the kaolin market on the right graph on the right-hand side. You can see those applications that I mentioned with paper, packaging and ceramics taking the bulk of the sales, and that's $5 billion globally in 2019. And on the left-hand side, you can see that the Asia Pacific market is the biggest market in the world and also the fastest growing. Just have a look at the picture now. Our resources in Wikipen, that's about a 200-kilometre drive from Perth. And we've got a mining tenement there, which is that green box that you can see. That's 996 hectares, and that's where we've got the 30.5 million tonne. And then those grey tenements that you see around it there, retention tenements reserved for future mining. There's about 9,000 hectares there and 640 million tonnes. Just to put some scale to what we're talking about here, Emyria is the #1 kaolin company in the world. They're a French-based conglomerate, and they have 16% of the market share globally. When you add all of their reserves and resources of kaolin together, reported to the PERC standard, which is the European standard, they've got 151 million tonnes. When you look at our resources and reserves based in here, just in the single place in WA, we've got 270 million tonnes. So it's a truly world-class resource. As I mentioned earlier, we've got a staged ramp-up approach, which was our way of minimising the risk of the expansion of the company. We're currently operating the pilot plant, which we've been operating for some time. That runs at about 5 tonnes an hour, and it's producing 7 or 8 containers a week, servicing the customers that we've onboarded. We're now building the stage 1 ramp expansion at the mine that will produce 25 tonnes an hour or 200,000 tonnes a year of kaolin. That's about, as I mentioned, construction's almost completed. We're moving into commissioning and then operations next year. We then plan to add another version of that processing plant to double the output. In fact, the building, the infrastructure and everything we've invested in the first round is set up to take that additional module. And then we'll be able to add additional modules as we grow. So here's some photos. This is the photo of the mine site. So the building's about 170 metres long by about 100 metres wide, and the tall sections, which is where all the processing equipment is, it's about 18 metres high, and the warehouse there is about 8 metres high, and it's got overhead cranes for handling the materials because most of the product gets sold in bulk bags. Here's a picture of the mine. We had some visitors to the mine and another view of the processing plant. And here's the latest pictures depicting the equipment that's being installed inside the building. You can see the layout of the feeder, the kiln, the separators and the silos. It's sort of depicted there. Then you can see the gen sets that have been inserted, the fuel cell and the main switchboard. It's a large main switchboard because we are planning to add renewables next year. So the switchboard has been set up to take all of that in feed as well. And then just a detailed picture of the kiln. So here's the Gantt chart for how the process is running, the construction program is running. As you can see, procurement and fabrication is complete, and we're now in the installation phase, and then commissioning will occur in the first quarter of next year. As I mentioned, industrial minerals, if you don't have customers, you don't have a business. So we've spent a lot of time developing our customer base. And I'm very happy to say that we've got 83% of our output for the first 3 years covered off in offtakes and LOIs. And we've got customers in China, Taiwan, Japan, Australia, Vietnam, and across all of those market verticals that I mentioned to you as well. So we've got selected customers on board taking orders from us now, with forward orders through to next year in all of these areas. Just a little bit of snapshot of the corporate overview. The top 20 shareholders hold 67% and the owners and board own 38% of the business, 282 million shares on issue, market cap around 60 mil today. This is our team. John White is our chairman. John's previously the CEO of Visy Industries and has held a number of senior positions in government advisory boards. Myself, I've got about 30 years experience in the industrial minerals business. Alf Baker, who was one of the co-founders of the business and still holds 17% of the shares. He's got a proven track record of developing businesses. He's out at the mine site today with his overalls on, helping with the construction. Linton Putland is one of our non-execs, a mining engineer, and Kathy Moises used to be with Patterson's in head of their research. He's also another non-exec. And we've got Michael Kenyon, who's our CFO, a lot of experience with ASX listed companies and really our safe pair of hands in this area, making sure that we comply with all the rules. I just want to sort of go back to the DFS because the DFS is a very important part of our business. On the next slide it shows the metrics, but you can see it's a very strong result with $257 million NPV and an IRR of 47%. That's based on a 12-year look, based on the first 200,000 tonnes plus the second 200,000 tonnes coming in after 3 years. So there's $1.2 billion worth of sales and an EBITDA of $350 million over that period. Here's my disclaimer. And with that, I'm finished. Thank you.
Thank you very much, Andrew, and thank you for the shameless plug as well. We have some of the best things in WA, don't we? He's referring to a TV program which I do a little bit of involvement with, which we travel around WA called Destination. Funnily enough, WA, where all the best people are. Right, we're going to travel now and do something a little bit different. We're going over to that area of trending megatrend number 3 that Greg mentioned in his speech this morning, and that, of course, was health and wellness. And there's an area of expertise for our next presenter. And I just want to double check my pronunciation. Would you please say?
Emyria.
Emyria, it is Emyria. Yeah. Thank you so much. Just want to double check on that one. So Emyria it's a clinical drug development and care delivery company, and their treatments target unmet needs and are focused on obtaining approval from major global regulators. To tell us more about the investment potential with a company that is a source of some very unique IP, strategically designed drug development and personalised care programs, which we'll hear a lot more about in the next 15 minutes. Would you please welcome Dr. Michael Winlow, and he is the Managing Director and also the CEO.
Well, thank you very much for the welcome. Great to join you here in person and online. And it's my pleasure to describe Emyria to you today. We're a really unique company. If you're interested in exposure to some of those macro trends Greg spoke about earlier, healthcare, biotech, digital health, you may like to listen to what we've got to say. I've even got a few tenuous mining analogies, which I'm going to try, and you can give me feedback on those later. But we're a really unique company. We're a data-driven biotech company that manages a very active clinical operations as well. What does that look like? Well, we actually manage a network of medical centers around the country. We have 7 physical locations where we provide care and personalized treatment for patients with unmet needs. These patients are referred to us by their specialist or their general practitioner because nothing else is working for them right now. And we give those patients access to new treatments. We also invest heavily in our data capture architecture. And so we're collecting incredibly high quality clinical evidence on how these treatments are working for these patients. And we use that data to launch standalone drug development programs, targeting global registration. And of course, to do this well, you need to build a really terrific team of world-class experts. And we've got some terrific teammates in our company. So I'd like to highlight a few of these folks. So Sir John Took, I think the laser just up here. This gentleman was knighted for services to medicine in the United Kingdom. He's a past president of the Academy of Medical Sciences, and he's a director on our board. Next to him is Jen Morgan, a pain specialist, one of our key early referrers. And next to her, Dr. Karen Smith, chair of our strategic advisory and the ex-global head of research and development and chief medical officer of Jazz Pharmaceuticals, who'll become relevant a bit later. And amongst the mix, we also have experts in clinical psychiatry, neuropharmacology, in medicinal chemistry and data analysis. And this team has collectively been responsible for more than 20 FDA drug approvals. And with that team, we're able to tackle some really important verticals. We're going for 3 major arms. One of them is the curation of really high quality real-world evidence on how brand new treatments work. There's a market leader, Flatiron Health in the United States, was acquired for $2.1 billion, building a world-class real-world evidence data set on cancer treatments. Pharma companies can use this data to try and figure out where their treatments are working best and accelerate their drug development programs. Our data is being used to identify standalone treatment registration programs for cannabinoid therapies. We've got some really great IP on where these treatments work best, and we're developing our own novel delivery technologies as well. And thirdly, recently we've been working in MDMA-assisted therapy. There's an emerging field here where the traditional psychedelic medications, when provided alongside careful psychotherapy, can have profound benefits for patients with major mental health disorders. We're standing alone a couple of programs. We've got an MDMA-assisted therapy trial in preparation for post-traumatic stress disorder, and we're also developing our own novel MDMA analogues with a key partnership with the University of Western Australia. So let's take a look at those. What is real-world evidence? This is the evidence that's captured and gathered outside of routine clinical trials. Pharma companies can be very selective who gets on a study, very prescriptive about how those studies can run. And they can often mean that the patients on those studies don't look like real patients who turn up at the GP's office. Major regulators recognize this, and they're taking an increasing interest and, in fact, setting expectations that companies wishing to register their drugs should present evidence from the real world on how their drugs are faring. The FDA now accepts almost 75% of their applications. In fact, this number has grown at 79 now. Nearly 80% of FDA applications for registration now contain real-world evidence. And we know that companies, particularly in the United States, are being set up and very well funded to provide access to real-world evidence. Of those, none of those, however, mentioned in this table, apart from Emyria, run their own clinical operations that provide frontline access to patients. So this is our data set. So far, we've seen more than 5,000 patients, and this is growing every month across our clinical network. This is our tenement, if you will, and we drill this data for insights on what is working, for what problem, and for which patients. And those insights can then inform our own drug development programs. And they look a little bit like this. So we're now focused on taking cannabinoid treatments and turning them into true pharmaceuticals. If you've ever taken aspirin, you may be surprised to learn that that was originally extracted from the bark of the willow tree a couple of thousand years ago. If you've ever taken a statin to lower your cholesterol, that was a compound first isolated from mushrooms. In fact, you can find some of that key ingredient in the oyster mushrooms. In fact, 40% of registered drugs today behind the pharmacist or available by prescription actually derive from plants originally. But of course, when we go to our doctor, we're not brewing teas, we're not eating mushrooms or cooking up food. We actually take a reliable dose form, a proper pharmaceutical, and we believe that is the future of cannabinoid treatments and of course, all of drug development. And one of the other great, I guess, imperatives to registered treatments is that they can generate massive returns. This improves patient access because of the reliability and the clinical evidence that supports prescribing and registration, and also reimbursement. We can see that play out in the story of GW Pharma. They're the first company to register a cannabinoid-based treatment. They have a treatment now that's generating nearly $700 million a year from that single product, treating a rare form of epilepsy. And you can see that the revenues from that one product dwarf all of the revenues currently obtained from more than 190 unregistered products available in Australia. The key thing about GW is that they were recently acquired from Jazz Pharmaceuticals for $7.2 billion US earlier this year. And you might remember Karen Smith, chair of our strategic advisory, was the ex-chief medical officer at Jazz. What we're trying to do is isolate the purest form of cannabinoid we can. We believe that the future will be synthetic. This offers reliability, quality, stability, and cost advantages over some of the plant-derived products to date. And we believe that's going to be really crucial for approvals with major regulators like the FDA and elsewhere in the world. We have a growing patent portfolio, as I've alluded to before, informed by the real-world evidence that we've gathered. This covers both the use of these treatments, but also novel formulations as well. And two of our leading programs, I'll just touch on briefly. EMD003, targeting a Schedule 3 over-the-counter medication that would not require prescription for psychological distress and the symptoms thereof. We're also building out a program for irritable bowel syndrome. Again, a major unmet need, 11% of the population, no registered proven drug treatment for this condition. I mentioned before our MDMA-based programs. So MDMA, otherwise known as ecstasy, is now under review to be rescheduled from Schedule 9 in Australia to Schedule 8. That decision will be made by the TGA in December this year. That's the same shift that happened to medicinal cannabis back in 2016. Around the world, huge amounts of investor interest in this emerging field, driven by, one, a recognition of the major challenges of major mental health disorders, and of course, the incredible promising research that's starting to emerge about how psychedelic-assisted therapy can help patients with those conditions. We have two programs in this space. One is an analog development program, where we're taking the ecstasy molecule, making slighter changes to it to elicit different kinds of responses in the human body. So therefore, we can diminish some of the side effects and amplify some of the more desirable qualities. This library is built on 10 years of research at the UWA, and we've got more than 100 analogs that we're currently screening for neuroreceptor activity. In addition, we're also planning an MDMA-assisted therapy trial for patients with major post-traumatic stress disorder. That protocol is currently under review by the major organization MAPS, who have led the most successful phase 3 studies in this treatment domain. And our therapists are currently completing their training for that as well. We expect to get that commenced next year. Finally, just a quick touch on the clinical impact we're having as well. We see a huge range of patients where nothing else has worked. We did a really great study recently with IQVIA and Nostra data, looking back in time, 12 months before these patients came to see us, and had a look at these patients who are on, and looked at their opioid levels. And many of these patients were on massive doses of opioid. you and I would feel the effects if we were taking maybe about 60 milligrams a day. These patients were on more than 150. And we could see that that trend had not changed for 12 months until they started treatment with us, when that dropped precipitously around 30% on average in just 6 months. So we know we're having an impact, and we can find out what dose works for which problem and in which patient population. We can get a registered treatment out for these patients, and they can have an alternative to this current treatment. So why invest? Here's our capital structure. We've got 250 million shares on issue. Currently $4.5 million cash in the bank, with 1.1 due from an R&D refund next month. Gives us an enterprise value about 58 million. About 60% of our shares are owned by the top 20, with the directors holding almost 30% of our shares. And then I'll just give you 6 reasons to invest. The proprietary real-world evidence that's uniquely ours, more than 5,000 patients, a huge amount of investment in the platform that supports that data capture. We've got a unique cannabinoid delivery platform and unique insights on where these treatments work best, and we're chasing registration with the FDA and the TJ for those. We have exposure into the psychedelic assisted therapy through our MDMA analog development program and the assisted therapies that we're leading over the next year. We've got a terrific team of global experts who have done this before, who've had success with FDA registration, and they're supporting our team. We've got a national clinical network, which gives us access to patients, referring clinicians, and we can use those patients and work with them to support our drug development. And I think we're grossly undervalued given the verticals that we're chasing and our upside that's coming. So thank you for your time. Please check out the website for more information and the extended bios on our team as well. Thank you very much.
Thanks so much, Michael. Our final presentation before lunch this morning comes from the Murchison region. One of us in our state is one of the high grade and potentially long life You and Me gold project. It's operated by Rox Resources. Alex has just joined us up on the stage here. Alex Passmore is Rox's MD, and he's going to join us to talk about Rox's low cost per ounce project and also You and Me's growth potential. Would you please make him very welcome today? Thank you.
Great, thank you, Chrissy, and good morning. And it's a pleasure to be presenting at the Southwest Connect conference, the inaugural Southwest Connect conference. Rox is a gold explorer and aspirational developer with with 2 main projects in Western Australia. The You and Me gold project, which sits just to the south of Sandstone in the Murchison district of Western Australia, and the Mount Fisher gold project, which is out to the east of Wiluna. So You and Me is more advanced than the Mount Fisher project, and I'll mainly be discussing that in this presentation. And you can see here an aerial shot of the You and Me main pit and all those green bags and piles on the ground there where we've been drilling recently. So Rox, just as a snapshot of Rox, Rox has a quality high-grade resource at You and Me, 1.7 million ounces at just under 3 grams, and that compares, that compares very favourably to most gold projects in the junior gold space in Western Australia. But not only do we have that 1.7 million ounces in the ground now, there's very strong potential for that to grow. So we grew that by around 40% this year. And we see that sort of growth rate will continue next year with all the work that we're doing at You and Me. And resource growth is really one of the key drivers of valuation in the junior gold sector. Then not only do we need to focus on value in the ground and the resources that we have in the ground, but also how we're going to economically extract that gold. And so we're working on feasibility studies into the start of production from You and Me, which we're expecting will happen in the next 18 to 24 months. Our second project, Mount Fisher, we've renewed our focus on that. There's a new exploration model that's been tested there, and we look forward to updating the market on Mount Fisher over the coming couple of months. Rox trades on around $40 per ounce of gold in the ground. And that is cheap relative to our peers. Our peers traded around $109 per ounce in the ground. So we see that as a very attractive entry price versus the sector. And that was recently recognised by a company called Hawke's Point, who are a well-recognised resources-focused fund manager. And to get Hawke's Point on our register is just testament to what they're saying in our project and the quality of the project. So Rox's near-term strategy is to be a very active explorer on all of our projects, whilst in parallel progressing studies into near-term cash flow opportunities. We're exploring in and around the UME mine sites, so near mine resource growth, but we're also looking further afield for the more grassroots greenfields type projects near UME that can feed into that mill in the future. We're, as previously mentioned, we're looking at early cash flow opportunities at UME. UME has a very low capital cost relative to the sector. So the average capital that it takes to get a gold mine into production presently is around $2,000 per annual ounce of production. We would expect our capital intensity to be around 60% of that, given that we've got a good infrastructure head start. So just looking at the vital corporate information, Rox trades under the ticker RXL. We have 158 million shares on issue, market capitalisation of 60 million. We're well funded with almost $11 million in the bank. We have, as mentioned, a strong supporting institutional shareholder in Hawke's Point, and we're working on building our institutional component of our register. The board of Rox is made up of Stephen Dennis, myself, and John Mayer, and we've recently built out the management team, reflecting the advanced nature of our asset base. So Matt Antill, our General Manager of Operations, Chris Hunt, our CFO, and Gregor Bennett, our Exploration Manager. And all of these gents have demonstrable success in the sector and have been involved in successful projects in the past. So just checking in on where Rox sits in terms of its peers and in terms of valuation. So this chart is enterprise value per attributable resource ounce, and these are peer companies that are at a similar stage of development to us. So they're in Western Australia, or they're in the same sort of part of the pipeline in terms of delivering their project. They're in feasibility study stage and that sort of thing. So very much relevant comparables, and you can see there that Rox trades on $40 per ounce versus an average of $109 per ounce. Our resource grade sitting just under 3 grams per tonne, which is indicative of the quality of the ounces in the ground. So just turning to UME in a bit more detail. So these two maps, the central map is a simplified geology map of the Yilgarn Craton, one of the key geological units in Western Australia. And the UME Greenstone Belt sits right in the middle of that, to the south of Sandstone and to the east of Geraldton. And the image on the right is an aeromagnetic image. So that's zoomed in on the UME Greenstone Belt. And that image picks out the high iron rocks, and we use that to delineate structures that are important hosts for gold. So the UME Greenstone Belt is a 150-kilometre long belt that has a large structure that runs through it called the UME Shear Zone. And you can see there's a red outline, and that's the mining tenement. So that's where past production has come from, and that's where most of our effort is focused. And you can see that past producing area sits at the junction of a north-south trending shear zone and a northwest trending shear zone. So we look for that sort of pattern, and we see that pattern a lot in the belt, and that's a very interesting structural target for hosting gold. So Rox holds a 70% interest in that mining joint venture and has various interests in the other tenement packages that you can see on that map. We hold around 80 kilometres strike of the 150-kilometre long belt, but the key focus is on the UME mine, where 670,000 ounces was produced at 5.5 grams prior to closure in 1997. It closed down, the UME gold mine closed down when the gold price was Australian dollars, in Australian dollar terms, $450 an ounce. So obviously, today's price of 2,400 or thereabouts, makes the economics of the project look a lot different. But also, we're not just focused on an old resource, we're focused on growing the new resource and adding quality ounces to that. Just interestingly, the last parcel of ore that was mined underground at UME was mined at 14.5 grams per tonne. So that would be a very, very profitable operation if that was operating today. And because it's a previous producer, there's an existing decline, an underground decline in place down to around 600 metres below surface. So that saves us having to develop that decline, which is an expensive exercise with today's tight labour market and tight equipment market. So we announced in the middle of this year an updated mineral resource, so 1.7 million ounces at just under 3 grams. That's made up of an open pit component of 800,000 ounces at 1.7 grams, which is good for an open pit grade in today's terms, and an underground component of 860,000 ounces at just under 8 grams. And so 8 grams underground is a good grade compared to most of the gold mines that you look at in Western Australia. This resource reflects all of the drilling that we did in 2020. And so all of this year's work, and we've had about 3 times the amount of work that's been done on the tenements in this year as we did the previous year. All of this year's work, including 2 discoveries, one at Junction and one at Link, are yet to be incorporated into a new mineral resource, which we'll be putting out in the March quarter of next year, so in around 6 months' time. So that's a key valuation milestone to look forward to for us. So just how many ounces we can add to this resource early next year. We've been discovering ounces at around $16 per ounce in terms of costs, which is well below the industry average. The industry average is between $30 and $40 an ounce. So our exploration team is doing a stellar job, and that just goes to how prospective the geology is at UME. So just looking at that resource in a little bit more detail, we've got here the colour scheme. So green is 1.5 to 4 grams, blue is half a gram to 1.5 grams. So half a gram is about an open pit cutoff grade in today's cost environment. So you can see there that the resources start from surface and in many cases don't require a cutback. There's also an opportunity for a high grade starter pit at Grace, which is on the southern end or the right hand side of that image, and then followed by an underground mine chasing that high grade orange and red material further below the open pit resource. Because UME is a historical producer, we have a good head start on where we need to be in terms of infrastructure. It's a disturbed site. That means that it's easier to get permits. It's easier to have a site license. The environmental aspects are well understood. The geotechnical aspects are well understood. So that is one of the reasons why when we're thinking about how to restart UME and what it's going to cost, our capital intensity is quite low relative to the sector. And as I was saying before, that average is around $2,000 per ounce, and we think that we can probably come in at around 60% of that. So in terms of progress to date, we've done 50,000 metres of drilling in the past 18 months. We've seen a substantial 40% increase in our mineral resource inventory. We're discovering ounces for $16 an ounce, which is well below the industry average. We've received the tick of approval from a well-respected institutional investor, being Hawke's Point, that subscribed for $11 million in March. We've built out our management team who are capable of delivering the UME project, and we've commenced feasibility studies into the restart of the project. But while we are doing those studies, we expect that resource growth to continue. As I previously mentioned, all of this year's drilling is yet to be incorporated into a resource. And just to give you an idea of the sort of drill results we're getting that will be incorporated into a resource, I've put some of the highlights up on the screen. They might be a bit small to see at the back of the room. So we're seeing intersections like 7 metres at 15 grams, 6.8 metres at 12 grams, all in extension position, so outside of the existing resource, but nearby decline and nearby open pits, so easily to get to and easily convertible into a reserve. We are also looking to the south of you and me. As mentioned, we've got 80 kilometres of strike in a 150 kilometre long belt. We've just completed a 424 air core hole program for 22,000 metres. Assays are pending for all of those. So we're very interested to see what happens regionally to the south of the UME main mine. So in terms of next steps at UME, we're progressing metallurgical test work. We've got a basic process plant design now, and we're just refining that. We're looking at where we'll start in terms of early production and pits, and then also, you know, de-risking the operation, looking at things like dewatering and geotech, and all of those sorts of things that you need to do before you go into production. Just quickly touching on the Mount Fisher project, I've just included one slide on this, as it's you're going to be hearing more and more about this, or Rox shareholders will be hearing more and more about this over the coming months. So we're starting drilling out here in the coming weeks. We'll be doing air core and RC drilling, and we're looking at a VMS type model out here. So following up on hits like 9 at 35, 8 at 15 in the old Mount Fisher gold mine. So thank you for listening to the Rox story. We look forward to coming back here next year and updating you on all of the progress that we've been making out there. Thank you.
I like that. That would indicate that you're going to come back next year. We'll have a conference next year as well. We really are hopeful that that is exactly what's going to be happening, that you'll enjoy today. As I said, I've kept my banter fairly succinct because I wanted to make sure that you get out to lunch and to afternoon tea, etc. on time. I've got 1 minute up my sleeve, so bear with me. When you go out today, when you go and grab yourself one of Lockie's balls, what you could be in the running for is $1,000 worth of wine. So it's a pretty good price. So go and grab one of those and scan the little QR code. There's a number of other great prizes, so make sure you keep an eye out for them as well. You do have to be in the room when we draw the prize at the end of the day, and I'm fairly nasty like that as well. You can see how the boys are scared of me and they get off the stage pretty quickly. I'm brutal like that at the end of the day. Those of you who come to our Perth ones will know that. So look, enough of me speaking. Get out there. We've got 25 minutes for our lunch break, and I'll ring the bell at about 12 and bring you all back in. I hope you've enjoyed the first part of our conference, everyone.